Welcome to Wolf Nest, your trusted property management in Salt Lake City, Utah. Today, we're bringing you the latest market updates for March 2026. Spring is upon us, and the U.S. economy is sending mixed signals. Rising energy costs are fueling inflationary concerns, while a softer jobs report hints at potential weakness in the labor market. The Federal Reserve faces a balancing act as it considers its next moves on interest rates. This month, we'll explore how these economic trends may impact housing and share updates from Utah's recent legislative session. February brought a decline in U.S. employment, with non-farm payrolls falling by 92,000 and the unemployment rate rising to 4.4%. Job losses hit sectors like healthcare, manufacturing, construction, and transportation, influenced by severe winter weather and a major healthcare strike. Despite weaker hiring, wages rose 0.4% for the month and nearly 4% year-over-year, signaling continued growth pressures. Last week, U.S. jobless claims remained low, indicating a relatively stable labor market. Initial claims fell slightly to 213,000, while continuing claims dropped by 21,000. Utah reported 1,686 initial claims, a modest increase, yet still low by historical standards. Overall, limited layoffs point to ongoing resilience in the labor market. Consumer prices increased 0.3% in February, bringing annual inflation to 2.4%. Core inflation rose 2.5%, slightly above the Federal Reserve's 2% target. Housing costs saw modest growth, with rents rising 0.1%. Rising oil prices could put upward pressure on inflation, but for now, interest rates are expected to remain steady. At the January 28 meeting, the Federal Reserve held interest rates steady between 3.5 and 3.75%, pausing after 3 consecutive cuts. Officials highlighted stable economic growth and balanced risks, signaling a cautious, data-driven approach. The Fed is expected to maintain this stance at least until June, evaluating conditions carefully before any changes. The 2026 Utah legislative session wrapped up March 6. HB 377, focused on property management licensing, will allow the Division of Real Estate to create a new property management-only license by the end of 2026. Housing stability programs also received funding, with $450,000 each for the Section 8 Guarantee Fund and Community Action Eviction Prevention Fund, supporting tenants and reducing unpaid rent for property owners. Notably, SB 97, a proposal to increase rental property taxes, did not pass, keeping current tax structures in place. Utah's housing market remains steady. The median sold price in February was $588,397, slightly lower than January, but up 1% from last year. Home sales are on the rise, with 1,246 homes sold, an 11% increase year-over-year. Inventory remains elevated, giving buyers more options as we move into a more active spring market. Statewide rents increased 0.3% month-over-month, remaining 1.7% below last year's levels. Salt Lake County saw small gains but remains down year-over-year, while Utah County leads in annual growth. Davis County experienced modest increases, and city trends are generally steady, indicating a stable rental environment. The White House has issued guidance to limit large institutional investment in single-family housing, aiming to preserve availability for individual buyers. Meanwhile, HUD and USDA removed the 30-day notice requirement for certain federally assisted housing programs, returning to pre-pandemic standards. Housing providers should review local regulations and adjust procedures accordingly. These trends show a housing market and labor economy in flux, with steady rental rates and measured legislative changes shaping the landscape. For property owners in Utah, staying informed is essential to navigating this evolving market successfully. For trusted guidance and property management expertise, rely on Wolf Nest.